So today we're going to be talking about untested areas. I've had a lot of questions about how I recognize my untested areas and why I always mark out untested area. Now, the major reason to marking out my untested area is because I want to be able to know areas of the market where has not been tapped into, where market hasn't tapped into, because most often market comes back to those areas where it has left untested. It comes back to those areas and then it's tap into them and possibly use the point of interest. Now, let me tell you this before we get straight into what we want to learn. Now, when it comes to untested areas, it is not independent, it is dependent. When we talk about untested zone, it is dependent on other strategies of the market. It is dependent on the market structure. It is dependent on the liquidity area where you're saying the market to come back to red. It is dependent on also points of interest. So you cannot just use untested areas to mark out how market is definitely going to move. So you have to also learn about market structure, about liquidity. You also have to learn about marking out your point of interest. So if you also want to learn all of those things, I have those videos on my channel. So let's get straight to untested area and how to recognize them. Now, when you want to recognize your untested area, you simply have to know what your imbalance mean. You have to know areas of impulse. You have to know areas where market is not balanced. Now, let's take, for instance, we have this impulse to the upside. This is an impulse to the upside. So we can automatically say this area has imbalance. Therefore, it is untested. You can see that markets could not use weak in filling up any of this. I'm going to mark it out currently. Now, when we talk about imbalance, you have to be able to recognize impulses. Now, when we talk about impulse, it simply means that direct move, like that sharp movement, either to the buy side or to the sell side. That is what impulse means. That is market creating good candles. It is creating strong candles in a particular area of the market. And as you can see here, we actually created strong candles to the upside, which is to the buy side. This is a strong candle to the upside. So we can say we have impulse at this particular area. Now, how do you find your untested zones? How do you find your untested areas? Now, your untested zones are always in between those areas where market created retracement, then started giving you sharp move. Now, when I talk about areas where markets created retracement, you can see that this was a retracement to the downside, and immediately markets finished creating that retracement, markets started moving impulsively to the upside. So it is very safe to say from this high to this low is an untested area. Market could not fill it back. You can see that wicks could not fill all of these places. There was no wick. Market created fair value gap. You can see there was fair value gap here. If you don't know what fair value gap means, I'll quickly make explanation to that right now. When we have three sharp candles and wicks could not fill those candles, or market could not use wicks in filling any of the three candles. For instance, this is number one candle, this is number two candle, and this is number three candle. You can see that we still had some space in between those candles. Now, it is this space that we call the fair value gap. There was literally gap. Market could not fill it. There was no candle that could come back to fill it up. There was no wick that could fill it up. Market just did that impulse to the upside, leaving this gap here. There was gap in those candles. It simply means at that particular point, buyers are in full control of the market. So this area, we had a gap here. There was a gap here. So it is very safe to say this area is a fair value gap. We had a fair value gap there. So this is a fair value gap here if you do not recognize what fair value gap mean. Also at this area, you can see that we had this number 1 candle, number 2 candle, then we had this 3rd candle. And in between these 3 candles, we still had space. You can see from this week to when we had this week, there was gap. There was an impulse. There was an impulse that could not be filled by any candle or by any wick. So that is what we literally mean by fair value gap. And you often see them when we have impulses in the market. So let's get straight to what we were discussing. So from this particular high to this low, it is very safe to say that this is an untested area. This area is an untested area. However, if you remember what I said in the beginning of this video, untested area are dependent on liquidity. They are dependent on market structure. Now, if we're going to be marking any of this, if we're going to be marking this particular structure, marking it in full context of analysis, we're going to say this is our last break of structure, yeah? We're going to say this is a break of structure. Now, after we had that break of structure, where is the possible area of liquidity? Obviously, this low is a possible area of liquidity in as much as it is an untested area. It is an untested area, but it doesn't stop it from being a liquidity for that particular area. It's an untested area, but it doesn't stop it from being a liquidity for that particular area. It doesn't stop it from being a liquidity for this zone. I mean, for this particular structure, this high, this low, then we had a break of structure to the upside. So this particular low does not, it's actually a liquidity, right? This particular low, it's a liquidity in as much as we had an untested area there. So if you're going to be marking out your POI at untested area, you have to be sure that that area is not your liquidity area for the market. If you want to watch videos on liquidity, I have them on my YouTube channel. You can check them out. You can check them out and watch them and know more about liquidity. Now, this particular area is an untested zone. And you can see what market eventually did around this place. We came back into that untested area. Markets picked into that untested area and then it made a particular movement. Even though this particular low was a liquidity for the market still respected that area of that untested area where markets could not fill after making that impulse to the upside. Markets had to come back and fill the area. Look at this area also. We had an impulse to the downside. There was an impulse to the downside. So it is very safe for you to say from this high to this, from this low to this high, is our what? Is our untested zone. However, you can see that markets eventually came back into the untested zone. It picked into it and it made a reaction. Simply because it was untested, markets could not feel it. So when market came back into that zone, it made a little retracement for it. It made that little sharp retracement for it because it was untested. And so also was what happened here. That was exactly what happened here also, where we had this retracement to the downside and markets made that impulse also to the upside. You can see that when we came back, we reacted to it. Even though we could not use that area for a buy continuation, we still reacted to it despite it being our liquidity area. So it is very, very key for you to know your untested area because in most cases, markets uses them as markets just react from them. Market uses them as a reaction, right? Market uses them as a reaction, but you still need to know more about your liquidity, your market structure, the areas where market is going to, the POI that market is reacting from before you use all of this untested area. But it is very key for you to also know the untested area because it also helps you in recognizing areas where market is making impulse to. You can see that this impulse that we had to the upside, it is just showcasing to us that market is making impulses to the buy side. So it obviously means that we are in the buy case scenario. So any sell you are going to be looking out for, it has to come with impulse. Market has to make that impulse to the sell side before you start looking out for your sell area. So those impulses help you to know the direction of the market, where market is currently coming from and where market is currently going into. As much as we reacted from this area, you can see the market eventually came back and it respected that structure and liquidity. You could see what happened here. I made this particular analysis on my channel. You can also check it out. I made this volatility 50. Yes, I made this volatility 50 analysis on my channel even before it's played out, and I made sure that I indicated this as a liquidity, and I marked out this area as our possible POI for market to use for the buy continuation. And you can see how much market respected it. And one of the things I noticed was this impulse that I am explaining to you guys. This particular impulse, the untested area of the market, and how market came back to them and still used them as reactions. Right now, if you also check this particular movement to the upside, we had a break of structure to the upside here. After we had this break of structure to the upside, see where we had our impulse area. We had this impulse to the upside, showcasing to us that the market is currently going in the buy direction. And from this high to this low is where we had our untested, area of the market. Remember the explanation I gave. You are going to find it before market started making that big impulse to the upside. The retracement before market started making that sharp move to the upside is where you're going to mark out as your untested zone. Now, this is our untested zone, but this particular low was a liquidity for market to take. This particular low that we had here, it was a liquidity for market to take. But you can see that after markets took out this particular low, we started making that impulse to the upside again to show us that we are still in the buy momentum. Your untested area, those impulses are just to showcase to you where market is currently directing to and how you can make use of those areas. So you have to also learn about marking out your point of interest. You have to learn about marking out your point of interest, marking out your structure, and being able to recognize liquidity before you start saying you want to look out for untested area of interest. So that is just what I want to make as explanation to you guys. This is going to be all for this video. We're going to make more video on strategies you can use in your day-to-day activities when it comes to trading. Keep living in the atmosphere of profits. Have an amazing trading week, guys.